Brian, I might not know, but Gonzalo Luchetti might have an idea. Thank you very much for being here, the head of U.S. personal banking for Citigroup. You oversee the group that launched this card. You have it here, actually, in case those sitting at home want to take a look at it. So why do this? And I ask in the context of, in 2021, you all kind of pulled back a bit from this space, and now it's become increasingly competitive in the 4 years since then. So, what strategically was behind the decision to really re-enter this market in a big way?
Well, thank you for having me, Leslie, first of all. And yes, I have the card to sell it if anybody in the studio wants to get it. And no, we're very excited about this launch. But if we take a step back, in our credit card business is one of our fantastic franchises where I call it the triple threat because it's a very large market, a revenue pool of more than $150 billion. It's growing faster than the GDP of the country, and we have one of the leading positions in the market. So it's a business that helps us drive growth and returns. And then when you look at our cards business, we just presented our second quarter earnings, and you saw it growing at 11%. So it has good momentum across acquisitions, across spend, across borrowing. And we feel like we have a pretty good, decent leading position as it relates to cash products, as it relates to the lending products. And this is an area where we had an opportunity to really double in. You mentioned 2000 and in the past as well, where we had pulled back. This is, I think, an opportunity for us to step more purposefully into this segment and really play for the affluent customer.
Why the high end in particular? And I know, obviously, the fee versus the benefits, there's kind of a balance there. So how did you think about kind of the pricing structure for this card, the benefits it provided, and just the high-end customer and what they're looking for right now?
Yes, no, we thought about it being, first, one big piece of our puzzle, as I was talking about in our portfolio. And then secondly, when you think about the price point, and Brian was referencing that, we are targeting really the affordable luxury space, right? We really wanted all of the savvy, affluent customers. So what we aimed for, and this was on the back of research, customers were telling us in droves, we really want simplicity, we want flexibility. I don't want to have a PhD in order to understand what the benefits look like. So for us, it was very important that the earn rate was high, that it was real in terms of being flexible and benefits that the customers could really use. And it didn't have a lot of constraints attached to them, whether it was time or whether it was with this retailer or that retailer. So yes, we leverage a lot of our strategic partnerships, especially if you're an American Airlines customer. This has additional perks, but even the core benefits around the high earn rate and the flexibility of the benefits that you can really use it with different flavors of your spend was very important to us.
What about the state of the consumer right now? You all reported earnings a couple weeks ago, and I know that CEO Jane Fraser spoke a bit about kind of the bifurcation of the consumer and their spending trends right now. How would you characterize, we talked a bit about the high-end consumer. What about the lower-end consumer right now? What are you seeing from your purview?
Yeah, well, overall, there's always going to be cohorts of vulnerability, and we have a few pockets of that. But if you look across the overall U.S. consumer, we still see a lot of financial resilience. And when you look at the macro, you see, income sources have been growing even from pre-pandemic times at or greater than the speed of inflation, whether it's wages or home prices or stock prices. When you look at the debt levels at on the personal side, they are reaching or at the levels of pre-pandemic as well. And then the labor market has been relatively constructive. And then when we look inside our 70 million customers, what we see is first continuation of spend. So customers are still growing their spend by about 4%, which is what we talked about in the second quarter's earnings. And then on the flip side, on the delinquency side, things are stable to improving. So in what we presented in the second quarter is the first quarter, I think, since the second half of 2022 that we saw a year-on-year decline in terms of net credit losses. And that I saw that across the industry. So to us, that's pretty constructive. You see a consumer that's still spending and still very disciplined as it relates to his or her debts.
Yeah, credit quality holding up remarkably well, and the normalization trends you're speaking about also seem to continue. Gonzalo Luchetti, thank you very much for being here from the New York Stock Exchange.